Hi there, everyone, and welcome into this week's market update. Now, don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances, and you need to decide for yourself whether it's appropriate to you. Okay, so the XJO's closed slightly lower today and sitting just around that sort of 74 resistance level. I could draw it just a little bit lower here. We haven't been able to maintain a close above that level. We spent two sessions sort of ticking through that and just sitting around here for the moment. Now, market's looking a bit overdone, so we see we've come into the new year very strong, seeing at roughly, I think it's about 6.2, 6.3%, something like that. Yeah, at the highs was about 6.2%. Higher so far for January. But yeah, looking a bit overbought. Maybe, time for a bit of profit taking perhaps. This never happens quickly, guys. Often after a big move up, you get a bit of sideways. Maybe we'll see a small pullback like this happen. Also, got to be questioning whether this is the start of an uptrend. All right, so you can see here we had the higher peak, higher trough scenario happening here. It'd be good to confirm a slightly higher peak here. Probably is technically a touch higher, but not all that much. There's a flag pattern also here that's suggesting a move into the all-time high. That's usually sort of can take, well, months really to play out, right? So, at this point, guys, I think the market's starting to turn around a bit. Our market's looking a bit more bullish to where it was. And I think we're likely to come up and test the all-time high early this year, but I don't think we're going to get it done in this particular run that we've seen, as it is looking a bit overbought. A small pullback to around 72, I think, is highly likely in the next little bit. All right, so let's get across the S&P 500, and where the XJ goes from here is really going to be dictated by this a little bit too. S&P is right at a key reflection point, guys. Okay, you got the downtrend line clearly through here. All right, you got an uptrend line forming with some higher peaks and higher troughs through here, and it's coming right into the edge of what we call a pennant pattern. We want to see which way this is going to break. So if it clears through 4,000 tonight, 41 is your next target, but ultimately you're breaking a very bullish pattern. Okay, I need 41 to break. 41 breaks, I think we're going to 43, 44, something like that. But otherwise, if it fails from here, well, we're probably just going to continue banging around inside this pennant. Okay, so if it does fail here, come back down near 38.50 in the coming sessions, and then probably rebound back up again. Okay, so yeah, look, it's that's where we're at, just waiting for that breakout, okay? And then coming across to the Nasdaq chart, right? And this is very important when you're looking at the growth space. You can see similar sort of thing happening here, where you got the downtrend line coming through. We're testing that at the moment. You got the support level, which is the lowest point we traded to in 2022, and we're right up into that downtrend line. Okay, so we're in a descending triangle here, and we're looking to see when this is going to break higher. I kind of feel that things have bottomed out for now. Okay, you can see that technically we've got a pretty strong base being formed through here, and we just really lack that confirmation of a bullish trend starting. We may see a fair bit of sideways first, right? That could possibly happen too. Okay, so technicals really at the moment for the US, we're squeezing into a triangle pattern, looking for a breakout to get a bit more confirmation of where we're heading from here. Now, in regards to fundamentals, okay, rates seem to be topping out here for the moment. Okay, definitely the rate expectations for February for the Fed is 25 basis points. That's far lower than what we were seeing last year, 75s and 50s. So I dare say we're getting pretty close to the top of the rate cycle for the moment. Now, why do I say that? CPI for the last two readings in the US have come in lower. Okay, looking pretty good. Wage growth on the last reading we had a couple of weeks ago, which helped this market soar higher, was lower, whilst we still maintained strong employment in the US as well. So really, like, what we're starting to see right now in the US is that best case scenario. Inflation's coming off, okay, and soft landing. Jerome Powell came out late last year and spoke about what a soft landing looked like. And the biggest thing that I took from that speech was really that we want to see unemployment stay low, okay, but we want to see wage increases slow down as well. And that's exactly what we saw in that January meeting, and hence why the market's got a bit excited on the back of that. So at the end of the day, right now, okay, I'm not saying this is not going to change. And as traders, what we have to do is keep watching this data and going, okay, what's the data telling us? Is it telling us a soft landing? Is it telling us a hard landing? Soft landing, I think the market's going to rally. We want to see inflation continue to slowly cool off, okay? And we want to see the talk from the Fed members. It's not going to go dovish, guys, not yet, all right? They have to stay a little bit on the hawkish side to neutral side, okay? They can't go dovish, right? If they go dovish, they're going to send inflation soaring, all right? You've got China reopening, you got the ability for commodities and energy markets to soar again. There's definitely massive risks to the market out there still at the moment. What we're looking for, okay, is kind of a chat, like the chatter around the Fed to remain sort of a little bit on the hawkish side, but not hawkish to the point of 75-point increases every month, right? We want to be interest rates are going to stay high for longer. Don't worry about how high they're going to go, but worry about how long they're going to have to stay high. That's the message, right? Because I think the market's going to be okay with rates sitting roughly around where it is for a while, okay? And hopefully inflation then slowly creeps below where the Fed rate is, all right? If we see that, market's going to go bullish. They're going to go gangbusters, okay? They might even go a bit gangbusters before that. But we want the Fed to remain a little bit hawkish, okay, to neutral. Dovish isn't going to happen for a while. Okay, so get dovish out of it. A few people have said to me, oh, the Fed's turning dovish. No, they're still talking hawkish. They're still talking rates going up, not down, and staying up for a period of time. But they're no longer talking as they were. And they're no longer talking that front loading type of conversation that they were having, where they wanted to load up the interest rates super, super quick to bring that inflation down. I think that cycle is over. If we're going to see lifts in rates now, it's going to be 25 basis points. Maybe we'll see a breather through March, okay? And I think that's kind of the best case scenario. The markets the way they are right now, especially in that growth space in the US, I think have definitely got some room to move up from here. So our market's bottoming, I think for the most part, yes, for the moment. With everything I can see this month, I think it's looking much more likely than it has for a while. Technicals are definitely looking that way to me, not confirmed yet, but definitely early signs of bottoming. We may even get confirmation in the next few weeks, okay, from a technical breakout point of view. But definitely showing strong signs of bottoming. What we're seeing at the moment on the Nasdaq chart, in particular, that triple bottom type pattern is a very strong sign that we're likely have bottomed. Okay. Now we should be waiting for the breakout before we throw money at it. Okay, or large sums of money at it, guys. So wait for that breakout. We want to see a higher peak, higher trough. And then that's your confirmation, okay? So what am I saying here? I'm saying don't throw your life savings at it yet, if that's what you're looking to do, right? General advice warning here, guys, right? So don't be going throwing a bunch of money at this based on what I'm saying here. What I am saying here is if you are going to invest, you're probably better off waiting for a breakout or a confirmation on the technicals. If you don't understand what any of that is, well, go get educated on technical analysis. But yeah, so the technicals are suggesting that we're bottoming. We're waiting for confirmation. Okay, our market already confirming an uptrend again, but in a broader channeling type pattern. So, I think our market needs a proper break into the all-time high to reconfirm an uptrend overall. US earnings. Okay, so we kicked off the earnings season Friday night before the US went into the long weekend. We saw the banks report in the US. Strong reporting, guys. Okay, JP Morgan, as a bit of a quick example, had a lift in forward guidance on earnings and revenue, and they beat that lift. So they also have grown from the previous quarter quite strongly, and they've also beat the same quarter of last year. So Q4 of 2021, they beat those earnings and revenue results. So strong report, guys. Anyone would think that they're in a recession or going towards recession. Well, I don't know. You could have fooled me on those types of earnings. So company earnings so far for the banks doing okay. considering the backdrop of higher interest rates, considering, an economic slowdown with 2 quarters of negative GDP for the US. Perhaps maybe things aren't as bad over there as you think. I don't know. Right, it's early in the season. Definitely for the banks, things are looking pretty good. You see Goldman Sachs and Morgan Stanley, if my memory serves me correctly, tonight, and then really looking forward to that Netflix type report. Thursday, next week we start getting the big tech names. Okay, so for the rest of this week, I think things will be a little bit quiet on the earnings front, other than a couple of banks. Really, and I'm talking about big headline sort of companies, your top sort of 20 type companies. Majority of them really kick into gear next week, outside of a couple of banks and Netflix this week. So earnings will heat up over the next few weeks. How that really goes will probably dictate whether we break higher. So how I'm feeling right now is probably we're due for a slight pullback in markets overall, because they're just a bit overheated. Maybe a couple of days of sideways or a bit of selling, just a bit of profit taking. And then if earnings continue to come through strong in the US, I think we're going to see another big rally. Outside of that, economic data wise, we saw some Chinese data today, which came in better than expected, but is still showing a bit of a slowdown happening in China right now. Markets pulled back a little bit on that, and we'll see how that plays out over the next few days. But at this point. We're kind of just waiting for the US to reopen tonight and tell us whether it's breaking higher or having a bit of a breather or pullback here. So what are we looking to buy, guys, here? Well, for me, there's a lot of beaten down stocks in our market and in the US at the moment in that sort of growth space. I'm looking for companies that are still positively earning, okay, but have been absolutely punished. So Microsoft is a prime example for that. Big fan of Microsoft at the moment, guys. Okay, I think that's a really good level to be buying longer term, and I think that you'll see a big turnaround in that company. You'll find that they haven't been beaten down as much from an earnings point of view than a lot of other companies out there. So I'd be looking for exposure there. But things like real estate, REA. On our market, Seek, BlueScope, some of those industrials that have been beaten down, even some of the REITs like GMG, there's heaps of companies in our market, ALL, Aristocrat Leisure, that's been beaten down so much. And, if you get that turnaround in that mood towards growth stocks, if you see that break up in the NASDAQ index, you're going to see these stocks rally. Okay. There's plenty out there to be looking at this year, guys. All right. There's plenty of beaten down stocks from last year. From a long-term perspective, if you're happy to hold 2, 3, 4 years, there's definitely some cheap stocks there. Okay. And the rally could happen sooner or could happen later. I'm not going to try and time it perfectly, but all I'm going to say is if that NASDAQ index finally breaks to the upside and shows me a higher peak, higher trough, well, I'm going to be looking at, I've got a list of about 11 stocks here that I'm ready to invest in. Okay, so just looking for, there's a couple of I've already jumped the gun on, I'll be honest, but there's quite a few stocks that I'll be interested in investing in. Alrighty, so I'll leave it there. Okay, thanks for listening in today. But things are looking a bit more bullish so far for the first quarter of this year. We'll be monitoring that as the year plays out. There's a lot of things that could derail this rally, guys. Okay, there's a lot of risks still out there, but they're not present right this moment. For me, interest rates, the mood towards interest rates anyway, is that it's topped, and we'll be monitoring that view. And that's really going to come down to whether inflation continues to remain in control or whether it's going to pop back up again. And nobody has the answer to that. But right now, the trends is suggesting, and history has told us, that inflation should have topped out and is coming down for a good portion of this year anyway. All right, leave it there. Take care and bye for now.